Hello everyone, this is Abhijit from Talentious Corner. If you are interested in share market and you might be investing in share market, you may be hearing about IRFC IPO, or you may have a question that shall I buy IRFC IPO or not. In this video, I'm going to talk about IRFC IPO, all about IRFC and their financial things. So you can take a call to buy IRFC IPO. IRFC stands for Indian Railway Finance Corporation. It was founded in December 1986. IRFC raises fund from open market to cater Indian Railways requirement. So it provides fund to Indian Railway to buy rolling stock assets, that is like locomotives, bogies, other cranes, these kind of requirements are rolling stock assets. Second thing is infrastructure, might be a bridge or anything that is part of Indian Railways as infrastructure. Indirect rail projects might be Indian Railways creating warehouses somewhere. So the fund requirement is fulfilled by IRFC. As of now, IRFC is the monopoly. It is the only one institute that raises fund for Indian Railway. In a nutshell, IRFC is a kind of bank for Indian Railway. So this is the data that talks about what was the total expenditure of Indian Railway in a particular fiscal year and what is the contribution of IRFC. So in 2015, Indian Railway invested 587 billions, out of which 110 billion were raised by IRFC. So that is around 18% was raised by IRFC. It as Indian Railways growth continued, contribution of IRFC also continued, and they are also growing along with Indian Railways. In fiscal year 2021, Indian Railways total expenditure is 1610 billion, and out of which 580 billion rupees is coming from IRFC. So that is around 36%. So from 2015, where contribution was around 18%, now in 2020 the contribution is around 36%. So both Indian Railways and IRFC are growing in a pretty decent way. Now question is that how IRFC earns money, or what is the revenue model for IRFC? So there are three things: Indian Railways, IRFC, lender or bond subscriber. So IRFC generates fund by bond subscription or by lending money from lending institutes. Once once this amount is there with IRFC, they buy assets based on Indian Railways requirement. They lease these assets to Indian Railway. In return, Indian Railway pay rental for assets. Once rental comes, a certain margin is kept with IRFC. Rest of the amount as an interest and principal payment is paid to lender or bond subscriber. For an example, let's say Indian Railway wants a locomotive. So they will go to IRFC and they will say, hey, we need this particular locomotive. This is our requirement. So IRFC will buy that particular locomotive. They will lease it to Indian Railways. Indian Railway will pay rent for that particular locomotive to IRFC, and the IRFC will be paying its interest and principal amount to lender or bond subscriber. Let's talk about financials of IRFC. So 2016 total asset value for IRFC was 1,08,400 crores, and in 2020 total asset value is 2,28,105 crores. So there is a just twofold growth in total asset. Total income 2016 it was 7,507 crores, and in 2020 it is around 13,823 crores. Around there is a pretty 1.75, at least around 1.75 times growth from as compared to 2016. If you talk about total expenditure, it was 5,557 7 crores in 2016, and if you'll see 2020, it is 10,164 4 crores. Similarly, profit after tax, or the profit that IRFC is keeping with them, it was 848 crores in 2016, and in 2020 it was 3,659 crores. So IRFC is growing pretty good, decently in that particular manner. Let's talk about two interesting facts. Number one, IRFC gets lease rented in advance. For an example, if Indian Railway wants to rent a locomotive, so they will pay lease in advance, might be 4 to 6 months in advance for that particular locomotive. And since its foundation in 1986, there is zero non-performing assets for with IRFC. So IRFC is doing pretty good, and they don't have a risk when they when they lease assets, or when they give something to Indian Railways as of now. So this IRFC is coming for IPO. So if they are having a pretty decent financials, why they are coming for IPO? So answer is to meet their future capital requirements. So as Indian Railway is growing, IRFC is growing, so more capital is required. So that is the reason IRFC is coming for IPO. Other than that, what is the future plan for IRFC? So they want to diversify their borrowing portfolio. They want to broaden their financial portfolio, and they want to come in the advisory and consultancy business in the financial field, so they can consult to other sectors too. So these are the three future plan they are having as of now. Risk, if you talk about what are the challenges or risk for threats for IRFC. So first threat is that privatization of Indian Railway, as we are pretty aware that government is trying to privatize certain sectors or certain fields of Indian Railway. So might be private sector might not be interested to take lease rentals, or may not be interested to be with IRFC, and there are the chances that when they will come in picture, there is a chances that NPA value will increase. Second risk or threat for IRFC is that other institutes may start raising fund directly. For example, Ministry of Finance, they're not raising fund for Indian Railway. They just allocate a particular budget every year to Indian Railway. They may start raising fund for Indian Railway, so there might be a competitor for IRFC. So these two risks I see based on my studies. Let's talk about IPO information quickly. So IPO is opening on 18th of January, and it will be there. Bidding can be done till 20th of January. Um, Per share price is going to be between 25 to 26 rupees, and you need to buy up one particular lot. So each lot contains 575 shares. So technically you need to invest 14,950 50 rupees to buy IPO to do IPO bidding for IRFC. I hope you all have answered that whether you want to go and invest in IRFC or not. Thanks for watching the video. Please like and subscribe to Talentious Corner.